Hey guys, this is a remake of today's video. I released a 5-minute little video because I was pressed in time as I had some things happening over at home and did not have the time to devote research or the thorough quality you expect from my videos. I finally got taken care of the issues in my life, and decided to make a little remake of today's video, and add a thorough analysis for the middle chunk. I know many of you did not like that short video I released earlier. I just wanted to get at least a recap out for you guys and not leave you empty-handed. Let me make up for the disappointment by making a little remake where we explore what exactly took place today, with the analysis, depth and complexity that this channel promised its audience. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. What happened today was nothing that wouldn't compete for Pornhub gangbang compilation. The stock market really broke down through all the support walls like they were butter, and nobody was safe from heavy losses today. After Nasdaq had its worst week since March of 2020, investors all over the world are looking at the Fed and demanding answers as to why can't they get control once and for all. Jerome Powell, set to reprise his role as Fed chair, is slowly becoming a bit of a bearish sentiment for investors, as more continue to assimilate him to bad market conditions rather than the opposite. Right now, it is more clear than ever that the Fed is working for one thing only, and that is countering high inflation, which recently reached that 7% at the end of last year. Politicians are now getting concerned by what we have been screaming all along, that the Fed has been overstimulating the economy so much that it has literally set course for the growth of what is perhaps the biggest bubble in financial history. Make no mistake, don't let any so-called Wall Street analyst misguide you. What we are currently enduring is not just a bubble, it's a super bubble, and one that will not end all happy and dandy like Washington is trying to sell us. As Jeremy Grantham said, the Fed and other financial authorities allowed and facilitated them, but that is not the worst part. The worst part of a bubble is the under-recognized damage that they cause along the way, deflating and marking down the wealth of normal Americans, the 99%. We might be set for MOASS, but when bubbles pop, they crush dreams, set back generations, decades, and accelerate negative economic forces. With the events that took place today, there is now more belief that the S&P could plunge 44% from its current level, which is already 7% below where it started this year. As we have talked about, the expectation of bad things to come is often worse than what they are, so this 44% figure could actually be quite bigger. I still get a lot of people asking me why now, what led to such a nasty fall. They seem to want something specific, when in reality the answer is the collective set of malfunctions in our economy that have led us here. Netflix was a bigger party to the way we fell, more than I initially thought it to be. The reason for this is because everyone had hopes for it, everyone poised their entire market expectations on Netflix, betting that if it yielded good results, it would somehow mean things were alright. This goes to show just how fragile and out of touch the markets are, which is why they are set for a rude awakening. Netflix share price accentuated the sell-off in tech stocks that spilled all over the rest of the market, which was hanging by a thread. Let's put down the figures once and for all. Nasdaq fell 7.6% this week. S&P 500 shed 5.7% over this past week, with more than two-thirds of the companies within this index being in the technical correction territory, which is calculated by a stock being down at least 10% from their record high. Netflix, being the pivotal stock, took perhaps the hardest hit, losing 22% on Friday after they warned that subscriber growth would slow down substantially. This is in part because of Disney, in my opinion. Disney has been stealing away a ton of customers in these streaming services, yet don't know how to contend with viewers canceling subscriptions. The quality of the Netflix service has also gone down according to some estimates and polls, and when every media company now has their own subscription service and you no longer monopolize the market, you can find yourself in a bad spot if you are not giving customer value for their money. Yields on treasuries shot higher this year too, which prompted a powerful stock market rotation out of tech stocks. US Treasury and Eurozone government bond yields fell as concerns about potential conflict in Ukraine continue to grow. Many are saying this will be a market crash, but I still don't think so. I stand by what I said about 3 weeks ago, that the markets were going to have their retracement as part of the correction phase before rallying. The reason for this is that there is still plenty of bullish sentiment for pretty much all stocks. Look at the way people were trading today, trying to buy out every dip. People want the stock markets to move up, and this will allow us to find a floor and continue upward progression for the foreseeable future, in my opinion. That is not to say a market crash won't happen, because it certainly will. I just don't think rate hikes and a poor report by Netflix will take us down there yet. I think the housing market is going to play a big portion in that, which is why I have devoted so much time talking about it in my morning videos. I think a combination between the housing market bubble crisis and the stock market bubble are going to play to each other to pop and blow things up, and that is when I think we get our MOASS and enter the next recession, as unfortunate as it is. There is no avoiding it, especially when Wall Street is making so much money and continuing to expand the bubble. There is no going back, and I think politicians are slowly starting to get it. We are headed for a crash, but it will not be brought down just yet. This is a slump on the way there, for there is much more time and space for the markets to continue to rally upwards. Give it a week or a month, but we will bounce back from this little correction phase. Buy as much as you can while everything is cheap. Any stock will literally make you money in the end. I bought a good chunk of GME today along with other stocks and a ton of Loopring as well. Before we continue, let me just say again, I apologize for my lack of quality in that last video. Please understand that I too have things happening in my life that prevented me from getting a video out in time. I made some adjustments and cancelled some things to correct that mistake in realizing such a poor quality video. I know we have set a standard here at Simulate and Trade, and I don't want to compromise it ever under any circumstances. I will do better next time. Let's now talk about today. The Fed submitted over $1.706 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 53% of the total volume today, while dark pool trades for GameStop accounted for 45% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing under 1% for the day. The stock traded fairly neutral during the pre-market, not showing any real force. Though it began trading a bit higher than the closing after hours price we had yesterday, AMC would slowly be pushed back down below the VWAP. It begun a reversal around 17.82, flying back up to 17.96. Upon market opening, AMC jumped up from 173.75 to 18.39. After reaching this high, AMC began falling, dipping all the way down to 16.22. Right after hitting this low, AMC began reversing back with a bounce that had it cross the VWAP. It managed to stay above it, which was very surprising and reassuring to me. It could test the VWAP support twice before actively entering into an ascending triangle. It managed to break resistance and ran to 18.55. After some volatility nearing the end of the day where AMC fluctuated between 18.75 and 18.40, it ended up closing at 17.97, above the VWAP. As for what to expect for next week, as usual, I will make a video on Sunday talking about it. GameStop traded bullishly, gaining over 3% for the day. The stock opened to a quick bounce from 100.12 to 103.88. After this little run, GameStop started falling down, eventually bottoming out at 92.72. After this, it began reversing, passing the VWAP and finding some support above it. It continued moving up until it reached 103 again. After testing that resistance wall, AMC retraced, finding a support wall at 99.35 before moving up slowly, entering an ascending triangle pattern. Here it broke the resistance, running to 110.18 again before falling down. It experienced some volatility that left it closing at 106.36, above the VWAP. As for what to expect for next week, like I said, I will make a video on Sunday talking about it. And that is all I have to say for the day. Again, a billion apologies for that earlier video. Simulate and Trade will continue to strive for perfection and to be the best channel out there for all analysis regarding market conditions and everything surround GameStop, AMC and the greatest squeeze of all time. Come join my Discord, link is in the description below. We have reached almost 1,000 members and are having a blast over there. For those interested in alerts for scalping and day trading, I have set up a service there as well, so come check it out. Let me know if you have any questions and what you thought about the video. Let me know if you bought today's dip or if you were waiting to see if it falls any further. Thank you all for the love and support you have shown me. I hope to see you tomorrow on the next one. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.